And welcome, it's Mary Ellen McGonagle with your Friday afternoon weekly Edge show for August 11th. Today, as usual, we're going to take a look at the broader markets, see where did we close the week, and then beyond. We want to be on the lookout for sector rotation. We're certainly seeing weakness in select areas. You want to be aware of that. And then also some of the headline news that drove price action last week. It was a little bit light on the news front, but certainly we did see movement in the markets. Last up, viewer question of the week, and it's all about potentially broadening out into more value-oriented stocks. Where should one look? And a couple of candidates. So let's go ahead and get started with that news from last week. We did get July core CPI. It creeped up slightly. It wasn't enough to get investors really concerned. However, today's PPI report also showed an increase. Both of these are talking about consumer and producer prices that are increasing. In turn, we're seeing an increase in inflation, and that's not good news. The 10-year yield on that treasury did remain above 4%. That's very impactful, or it has been and can be. In turn, we are seeing continued weakness in the NASDAQ, closed below that 50-day moving average. Also, on Thursday, we did see weekly unemployment edge up, and that was slightly good news. The Federal Reserve has often talked about how high employment has been keeping inflation elevated. Next week, retail sales numbers will be released for July. We're also going to see a number of well-known retail companies report their results, so look for potential reactions there. We're also going to see the Federal Reserve meeting notes from their most recent meeting. That's coming out on Wednesday. Housing starts due, as well as industrial production numbers. So from here, let's take a look at where the markets closed for the week. And here we are with the daily price chart of the S&P 500. A couple of items to be aware of is the fact that this relative strength indicator is back in negative territory and trending lower. And then also the faster moving momentum indicator stochastics is in negative territory and seemingly headed lower as well for the S&P 500. From here, you're going to want to be aware of key areas of potential support, as well as upside resistance should we see any rallies here. So on the support side, this key 50-day simple moving average, we are seeing that the index closed just above that. A break below that 50-day on heavy volume would certainly be concerning. It's a very widely viewed area of support among investors. And then from there, you will want to drill down to other areas of key support that I'll review further in my weekly MEM Edge report. And so on the upside, you are going to see that we could easily find resistance at this downward trending 10-day simple moving average, and then also that 21-day simple moving average. These are your two very near-term possible areas of upside resistance. And then from there, your high in that late July period is going to be your next area of potential upside resistance before we really resume a nice uptrend. From here, I do want to share with you a view of the equal weighted S&P 500 that takes out those heavyweight mega cap names. And this too is deteriorating, not quite as sharply. That RSI trending downward in negative territory, and likewise with the stochastics. This particular view signals that we are seeing broadening out deteriorate because it takes into account and equal weights all areas of the market. So also I do want to share with you a daily price chart view of the NASDAQ, because you want to be aware of the fact that it broke key support at that 50-day simple moving average. Pretty high volume here. We also have a negative RSI and negative stochastics, so continued potential weakness here in this tech and growth heavy index. Also of note is the seasonality view of the S&P 500, and this is looking back over the past 5 years and giving you a bar chart view of, on any given month, the months when the S&P closes higher than it opened, and we can see that August is seasonally a weak period and September can be even weaker. Now, let's go ahead from here and take a look at the underlying 11 sectors in the S&P 500. You want to get a sense of where that relative strength is, where the money flows are taking shape. And we can see with this 2-month daily price chart view up here at the forefront is energy up almost 3.5%. This particular sector is seeing renewed interest here in the face of higher oil prices and then also good earnings coming out from several and many of these energy related companies. Also up here at the forefront is healthcare. XLV resuming its uptrend last week. I'll share with you areas there. This is going to tie into our viewer question of the week, but generally looking quite constructive. Financials, this particular group was flat for the week, trending a little bit downward, but we can see momentum still in positive territory. We'll take a look at some of those sub-industry groupings there as well. And then as we move forward, you will want to be aware of areas of weakness, and certainly consumer discretionary was down over 1% relative to the less of a decline in the S&P 500. Now, with XLY, it does have several heavyweight names that are going to impact it, and among them is Amazon and Tesla. Of the two, Tesla had a pretty sharp pullback, and we can see that the consumer discretionary sector finding support at that upward trending 50-day simple moving average. Momentum just drifting into negative territory with that RSI, and the MACD still in positive territory. Next week, we'll get a lot more information on that discretionary group with that retail sales number and those earnings reports. But certainly most notable is the continued and sharp weakness here in technology. It's now down below that 50-day simple moving average, MACD down in negative territory, and pretty high volume on this selling. So I will share with you some of the groupings there that are coming under more than average selling pressure as we move through, and take a look at the sub-industry groupings in the S&P 500. And here we are with the 2-month daily price chart view of ETFs that I find to be really helpful in staying on top of beyond those sectors and beneath at some of these industry groups. First up here, the US dollar ticking higher for the week, up about 1%. And we can see positive momentum there, all about higher interest rates. But let's take a look at one of the more notable correlations, and that is the deterioration that we are seeing in gold, often responding to a stronger dollar. Next up is Brent crude. I talked about the strength here helping energy, and crude oil is now at $86 per barrel and also having nice positive momentum characteristics there. Next up is the yield on that 10-year treasury, and it did tick back up above 4% at 4.16. 4% has been a notable number for the yield on that 10-year because it does historically negatively impact growth stocks, and that is another reason that we're seeing the NASDAQ pull back, that growth heavy index. So as we move forward, of course, you do want to be aware of weaker areas, and I talked about technology being weak. Here we are, semiconductor stocks, and the overall group was down over 5%. It has broken support at this 50-day with negative momentum, not looking particularly constructive, certainly on the near term with those semiconductors. Another area in technology, software, also breaking key support with negative momentum. So generally weakness in this area as well. I talked about financials. They were mostly flat for the week, but let's take a look at this regional banking ETF, KRE. It did drift lower for the week. However, the momentum remains positive with this RSI above 50, likewise with the MACD. There are a couple of bright spots here. I do have two names on my MEM Edge report, with one of them holding in much better than the other, but still an area of interest. Now, from here, what I did want to do is share with you a view of an ETF that is widely used when determining the strength or weakness in value stocks, and this is VTV. It's the Vanguard Value ETF. And let's take a look. It is generally pulling back, certainly with the markets, but holding up well above this 50-day simple moving average with a positive RSI and MACD. Now, from here, I am going to share with you a couple of names. So we'll begin with the heaviest weighted name in this value ETF, and that is Berkshire Hathaway. This particular company came out with their earnings last Saturday. Very strong results. We can see the gap up that took place and a subsequent rally. It did pull back with the broader markets. However, this particular name remains above its 10-day moving average with positive momentum. Next up, we can take a look at a couple of the heavyweight pharmaceutical names that are in the value ETF as an example of certainly areas that are bright, but the commonality is many of these names are coming out with strong earnings. Johnson & Johnson reported late July. You can see this big advance subsequent to their result, a nice subsequent rally. Now, it has gotten a bit sloppy over the past 2 weeks, but your momentum remains in positive territory. And a large cap name that reported last week came out with great numbers, strong growth prospects, and that is Eli Lilly, LLY. I'm going to mark this up because after the release of their results, we did see this gap up into a base breakout. Take a look at this super high volume here as the stock advanced on the day. And then subsequent to that, we are seeing a nice continuation rally as the stock proceeds higher. I'm going to share from here an intraday chart that can be really helpful after these stocks experience these gaps up, as far as telling you, is there further near-term upside potential? And here we are with an intraday chart. We can take a look at a 1 hour intraday, and we can see that the stock had that gap up earlier this week and has pulled back since then, but has remained in an uptrend. The stock is above the 5 and 13 hour moving average. Your MACD and RSI both in positive territory. So it does look quite constructive near term for Eli Lilly as well. I'm going to leave it there. Everyone have a fantastic weekend. I'll look for you here again next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.